Yesterday, Tesla released its official Q2 financials, and with so much resting on these results and both Tesla shorts and Tesla fans all revved up to argue who is right and who is wrong, I made a video on the stupid infighting last week, you're likely to see any number of reports taking opposing sides on what these results mean. Rather than take sides, we're here today to give you the basic facts contained in that official second quarter 2018 shareholder letter. You can read it for yourself at the link I've provided below, and I'm sure that it will be subjected to any number of different interpretations in the coming days and weeks. I should note too that for figures quoted in billions of dollars, I've rounded up or rounded down to the nearest $10 million where appropriate, to make it easier for everyone to listen to. And I should note, while this video was originally intended to be released on August 1st, I managed to do something crazy to my back yesterday after writing the script, which means I had to delay filming it for a day. Sorry. We start with Tesla production, which, as I'm sure you'll already know, continues to push records. As confirmed by the shareholder letter, Tesla managed a total vehicle output of what it says is roughly 7,000 Model 3, Model S and Model X vehicles during the last week of June. Of those 7,000 vehicles, 5,000 were Model 3, while the remaining 2,000 were split between Tesla Model S and Model X. Using this figure as a benchmark, Tesla says it believes an extrapolated production of 350,000 vehicles per year should be possible and allow it to become a sustainably profitable company for the first time in its history. As expected, Tesla says it's pushing that production envelope further and expects to increase the number of Model 3 electric cars it makes to 6,000 units per week by late August, ramping up beyond that in subsequent quarters while keeping any additional expenditure as lean as possible. While Tesla acknowledges some of the bottlenecks it suffered in the past 12 months with Model 3 production, remember that early examples are now a year old, and it notes that the new production line was its answer to that bottleneck. It seems to have learned not to make any promises when it comes to future production goals too, stating instead that it hopes to increase Model 3 production to 10,000 cars per week as fast as it can, which is probably sometime next year. Overall, Tesla says it produced 53,339 cars in the second quarter, delivering 40,768 of those cars to customers. Of those, 18,449 cars were Model 3s and 22,319 cars were split between S and X. The disparity between delivered and produced vehicles, just over 12,500 cars, does at least explain reports made towards the end of the last quarter that describe acres and acres of Tesla Model 3 cars waiting to be delivered at Tesla distribution facilities across the US. Despite all of those undelivered cars at the end of the quarter, however, Tesla's total gross automotive revenue, which takes into consideration sales and leasing income but doesn't take into account things like actually making and selling the cars, rose from $2.73 billion in the previous quarter to $3.36 billion in the current quarter. Automotive gross margin also ticked up slightly by 0.9% from last quarter to 20.6%. However, this is still 7.3% less than the gross automotive margin from Q2 last year, showing that there is some growth to be made. I should also note that unlike Q1, when Tesla sold $50 million of ZEV credits, Tesla sold no ZEV credits during Q2. Despite not yet being available to lease, Tesla Model 3 sales have, says Tesla, pushed the Model 3 over 50% market share in the mid-size premium sedan marketplace in the US. It notes too that many of the cars being traded in for Model 3 show that Model 3 isn't just gaining sales in its chosen segment. It's also getting what the auto industry call conquest customers, customers who are coming to the brand and market segment for the first time from other brands and segments. A good example of this would be someone trading in a Nissan Leaf or a Volkswagen Golf for a Model 3. Outside of the automotive world, Tesla says demand for its energy products do remain high and demand is currently outstripping supply. While Tesla's first Gigafactory is now churning out battery packs, Tesla is currently focusing that attention on the automotive segment, resulting in a gross energy generation and storage revenue of $374 million, which is a fraction of its automotive revenue. This all results in a gross revenue of just over $4 billion on Tesla's balance sheet, which is an impressive figure considering that this time last year its gross revenue was just $2.79 billion. However, while that is the figure that many will see quoted in headlines, it's worth noting that the $4 billion figure doesn't take into account what's called cost of revenues, which roughly translates to the amount of money it takes that you need to spend to make and sell the thing that you're selling. Factor those in across the board, and Tesla's gross profit sits at $690 million for the quarter. In total, Tesla's operating expenses did grow by 18% in Q2 to $1.24 billion, partly down to the $103 million that it spent on restructuring the company in an attempt to save money in the long run. That restructuring will pay forward into future quarters, but what has become apparent with Q2 is the money saved by Tesla. Overall, negative free cash flow from the company in Q1 was over $1 billion, but in Q2 it was $739 million, suggesting Tesla is readying itself to turn a corner. Despite this all, however, Tesla managed to finish the quarter with wider losses than it started, with $717 million loss for the quarter, equivalent to $4.22 per share. And while Tesla's total gross revenue is far better than the $3.14 billion expected of it by Wall Street, the losses are larger too, which Wall Street had hoped would be closer to $2.71 per share. That said, in after-hours trading, Tesla's stock price rose. What does this all mean? Well, Tesla's making more cars than ever before, but it's still spending inordinate amounts of money to do so. And while it's still not profitable yet, the amount of money it's burning through is far improved compared to the last quarter. That, and increased production and larger economies of scale, suggests Tesla could be heading towards profitability at last. Tesla even says it hopes that to happen in the second quarter of this year, provided there isn't something unexpected happened financially or we plough into another economically turbulent period. I'm sure that includes, but doesn't officially mention, any ramping up of trade war tariffs between the US and China. Which reminds me, that new factory in Beijing, well, Tesla says it hopes to have it online in 3 years' time, with initial production volume sitting at about 250,000 vehicles per year to start with, before rising to 500,000 cars per year a few years later. To fund it, Tesla says it will use local debt, which is a coded way of saying that it will look to borrow money from Chinese sources to help build its Gigafactory 3. What of the earnings call after the release of the shareholder letter? Well, last time Tesla held an earnings call, Tesla CEO Elon Musk hit the headlines not because of how his company was doing, but because of the way he treated journalists and analysts on the call. This time, Musk was a very different person, humbly apologising for not being polite on previous earnings call, blaming his behaviour in part on a lack of sleep and working 120-hour weeks. Musk's apologies were well received by those in the call and by many of us who weren't in it. Discussing autopilot, Musk disclosed that there's a new autopilot on the way for next year, which will be a plug-and-play hardware upgrade option that customers will be able to put into existing autopilot-enabled cars. Capable of operating 10 times as fast as current hardware, Musk said that the system has been in development for 3 years and has been used in stealth mode for some time ahead of yesterday's call. Plenty of other things were said in the call, but there is one thing that's worth noting before I go. Musk now believes that Tesla won't hit its previous 1 million car per year goal for 2020, but he's optimistic that Tesla won't be far off that, managing some 700,000 cars per year by then. For reference, GM made and sold 9.6 million cars last year, and Volkswagen, now the world's largest automaker, made and sold 10.74 million last year too. So that's it. That's Tesla's Q2 2018 figures in a nutshell. What do you make of them, and what do you expect of the company moving forwards? Is it heading finally out of its year of hell, turning towards profitability, or is it still very much in trouble? Leave your analysis and thoughts in the comments below. And while I wish I didn't have to say this, polite conversation is always welcome, but please keep it civil. That's it. Thanks for joining me, and see you next time.